This is the future of finance.
This episode is brought to you by Metis Global Partners and by the Intentional Endowment Network's 2025 Annual Forum, taking place October 27th and 28th at Goucher College in Baltimore, Maryland. Hi, everyone. Welcome to the Future of Finance podcast. I'm Georges Dyer, and this episode is the first in a new series that we'll be rolling out over the next few months, focused on responsible tech and AI, and especially on AI. As we're all aware, there's tons of exciting potential with AI and also a lot of concerns, and those concerns can represent real risks for investors. Everything from child safety to privacy, surveillance, racial and gender bias in these systems, to jobs, workers' rights, and the list goes on and on. So I'm really excited for today's guest, Michael Connor, who is the executive director of Open Mic. Open Mic is a nonprofit that works with investors to engage with tech companies on all of these types of topics. And they've been doing it for a long time, almost 20 years. So the founding group was really ahead of the curve and foresighted on these issues. And they continue to help investors and companies understand what's next and what investors should be focused on when it comes to the risks around tech and AI. They mostly focus on shareholder engagement as a strategy, working with big public companies. But we also talk about the role of early stage private market investors in venture capital and private equity and how those fund managers can help startups establish strong, responsible tech policies and practices early on in their growth. So I hope you enjoy it. Please let me know what you think. Leave a comment or reach out on LinkedIn. And if you have any suggestions on others working on responsible AI from an investor perspective that we should be talking to or having on the show, please let me know. So thanks so much. And now here's my conversation with Michael. Hey, Michael, welcome to the podcast. How you doing?
Good. Glad to be here.
Very glad to have you. I'm really excited. This is part of a new series and a kind of project we're doing around responsible tech and AI. And you've been thinking about these issues longer than most. So really appreciate coming on to talk about it. And to get us started, why don't you just tell us briefly about Open Mic and what you all do?
Sure. Open Mic is a nonprofit organization. We've been around since 2007, 18 years now, a long time. We're a small organization. The mission is greater corporate accountability in the development and deployment of digital technologies or technology. And we do that. We try to foster greater corporate accountability in a variety of ways, but largely through what's called shareholder engagement or other finance focus activities. So we're trying to use the business voice to persuade companies to adopt more responsible policies and practices.
Yeah, I'm excited to dive into that. But your background before this is in journalism, right? So I'm curious, how did that background evolve into this work you're doing now on these issues?
Yes, I'm a reformed journalist. I worked for many years at the Wall Street Journal and at ABC News, and first as a journalist and then as a media executive, so to speak. And then after working for big companies, I decided I wanted to try my hand as an entrepreneur. So I bought a magazine called Business Ethics Magazine. It turned out to be a terrible investment. But Business Ethics Magazine did cover what was then called socially responsible investing, SRI, which is now sustainable investing. I met a number of people in that field. And at one point in 2006, somebody said, hey, the technology that socially responsible investors had focused for many, many years on climate and environmental issues. And we started talking and decided that tech would be the next big thing. And from that was born Open Mic.
Well, very foresighted, because that was around the time that social media was just released.
Right.
Was that media connection what made you make this leap to tech?
Yeah, it was certainly media. Yeah. It was, and frankly, it was at a time where tech could do no wrong. In fact, a variation of that was Google's motto, and how times have changed. We now see that, tech is ubiquitous, and initially we had focused just on the tech sector, but now we've expanded our focus to be looking at the development and deployment of all digital technologies, because now technology is ubiquitous, whether in banking or education or medicine, whatever healthcare, whatever you do in the day, technology is affecting you. So our mission is much broader.
Yeah, it's affecting everything. You mentioned your work focuses on shareholder engagement, and I think a lot of our listeners are familiar with that generally, and you gave a quick primer. But you work with investors to engage with companies. Talk a little bit about just the mechanics of that. Do you file shareholder resolutions, or is it more conversations and dialogue with companies? And also a little bit about how you think about the whole positive impact of this work on society versus the financial performance considerations.
Many, many questions there. I'll try and take them one at a time. Shareholder engagement involves shareholders. We deal mostly with institutional shareholders, not so much individual shareholders. And these are organizations or investors, foundations, faith-based investors that are looking, to have a good return on their investment. They have a fiduciary responsibility to get a good return on their investment. So that is often and usually their primary focus. But at the same time, especially when you're looking at tech, they realize that the companies that they're investing in do a lot of things and oftentimes have either intentional or unintentional harms or risks that they present to society. So the goal is to maximize your return on investment while looking toward those potential social harms and risks and the damage they can do to society. Now, where Open Mic comes in is our job is to look at the tech landscape, identify key issues, research them to death, understand them really, really well, and then work with investors to engage with companies. Oftentimes, the companies don't want to hear from us, but frequently they do. And that engagement can take many forms. Sometimes it's a dialogue with a company. We and the investors have gotten to know some of these companies pretty well. The companies will talk to us about particular issues. In some ways, they consider us, I think, a canary in the coal mine because they know that we've studied the issues, and the issues that we are raising are issues that others will be raising in the coming years. Oftentimes, companies don't really want to engage with us, or else we can't agree with them. So that can lead to the filing of what's called a shareholder proposal or a shareholder resolution, which is a fairly formal, regulated by the Securities and Exchange Commission process, where we file a proposal on behalf of the investors, or the investors file it themselves, asking the company to do certain things. That can sometimes lead to a vote, in which case we'll try to marshal great support among shareholders. We've had varying degrees of success. We have had majority votes. Often you don't need to get a majority vote for a company to notice that you're there. Oftentimes, though, companies will say, hey, we noticed you filed that resolution. Can we have a discussion? And that will lead to that discussion can sometimes lead to a withdrawal of the proposal in return for the company taking some action that affects their policies and practices. So I could talk a long time about this whole process, but it's a complicated process.
Yeah, it is a big piece. And of course, it's under attack right now in so many ways, but really important. And I love the way that you put it about the canary in the coal mine, because, working with long-term investors, it comes back to that financial value piece. And I think companies are often focused on the day-to-day and can have more short-term time horizons. And having those long-term investors come in and help companies see what's coming down the pike and bring in their expertise is really valuable. And I think the fact that you all started this when you did is a testament to that. I definitely kind of underappreciated how some of these tech risks fit into some of the environmental, social, and governance conversations until more recently.
I'll give you one example. It was a number of years ago now, probably 10 years ago. We went to one of the major tech companies. I probably shouldn't mention which one. And we said, there's an interesting thing about when companies have a board of directors, they have committees that look at certain things. And each of these committees are very structured and have very serious responsibilities. And we went to this tech company and said, you got a problem. And they said, what is it? We said, nowhere in the charter of any of your committees is the word privacy mentioned, which means that nobody on your board of directors has a fiduciary responsibility to worry about privacy. And they said, can we get back to you in 2 weeks? And they did. And the result was that they reformed all of their committees, and it was a fairly elaborate process, and recognizing that privacy was a core issue that they had to address. And sometimes it's as basic as that.
Yeah, it's a great example of how engagement can improve a company's operations, and it's one of many issues. I know that you're focused on a range of issues related to tech broadly over the years, but I'd love to dive into more specifically on AI, because obviously that's a huge issue for these companies and society. And I know that even within AI, there are a ton of issues and risks to consider. But maybe just give us a quick overview of some of the biggest issues that you're focused on right now. And maybe we can dive into just a few of those a bit more.
Oh, sure. I mean, one of the biggest challenges with AI is that most people don't really know what it is. And we can define it and try to understand it intellectually, but it does happen in a black box in a computer somewhere or computers. And it has broad implications. And one of the most worrying things is the degree to which the industry is trying to persuade everyone to place 100% trust in artificial intelligence, that it is infallible and that it can't do any wrong. When in fact, the reverse is very true. With generative AI, ChatGPT and others, we've seen that it literally makes things up. There's a technical term. They call it a hallucination. It's a technical term. And these AI makes things up. There have been cases where AI systems have created in lawyers using it. The AI systems have created bogus court cases, citations in legal filings before a court. So if you can imagine that being applied to your health, to your employment decisions that affect you, there's all sorts of reasons to be concerned. So AI has implications certainly in the workplace. There's a lot of worry that it's going to displace a lot of workers. It has enormous implications in government, in law, in science. So it's really, and again, with the industry telling us that we should place 100% trust in AI, that's one of the biggest concerns. So there's need for learning more, for guardrails, and probably regulation so that companies act responsibly.
Yeah. It makes me think of the old saying, fool me once, shame on you. Fool me twice, shame on me. And you referred to Google's motto of do no evil years ago. And we've seen a lot of the negative impacts of social media and tech. So I think we certainly need to be cautious.
And you mentioned social media, and I think one of the big lessons with AI is we learned a lot from social media. We learned a lot from Facebook, because Facebook, when it first came out, and Mark Zuckerberg has said time and time and time and time again, trust me. Trust me that this social media platform is responsible. We know it's been responsible for hate. We know it's been responsible for genocide. We know it's been responsible for very damaging, for serious damages to young people. And so it kind of rings hollow when the tech industry says, trust us, AI is going to be great. I should say, we're not Luddites. We're not opposed to technology. And I think that's really, really important. We think technology is really important. It's great for most people. It's great for the economy. It can do all sorts of things for society. It can help us cure cancer. But there are things we need to worry about. And that's why we need to have guardrails.
Yeah, and there's just such a race right now, too, that I think it can be hard to just slow down and establish some of those guardrails. But I think it's important for investors to do that and ensure that companies do that.
Well, and with the amounts of money being poured into AI, I mean, it's hundreds and hundreds of billions of dollars. It's almost incalculable at this point. And there's real concern that money is the capital that is going into the AI industry could and should be used in other places in the economy. It is, and real concern that we may have an AI bubble, that too much has been invested in AI without returns, and that it represents a really serious financial consideration for investors.
Let's talk about just a few of those issues. I mean, one I'd love to dive into is the media piece and talk about the misinformation and disinformation risks around generative AI. And you all did a campaign last year about that. You had engagements with Microsoft, Alphabet, and Meta. Tell us a little bit about what that looked like and how those engagements went.
It boils down to, the dangers with AI, with a lot of algorithmic systems is that a fact is not a fact. And that's the real danger with misinformation and disinformation, especially when you combine it with social media platforms, is that we don't know what reality is anymore. And that's one of the most fundamental things we can have in a democracy, is that you and I can disagree about an issue, but at least we're dealing with the same set of facts. So with the big tech companies, we have had for several years proposals working with investors, asking them to address the issues of misinformation and disinformation. We've had shareholder proposals that have gotten good returns. In fact, at Meta, we got a majority return of what are called independent shareholders, excluding Mark Zuckerberg. At Meta, we got very close to that as well. The frustration is that in these companies, even with those votes, haven't done a whole lot to correct their behavior. In fact, Meta has done away with content moderation. In effect, they used to have their own content moderators. They've essentially eliminated that. So the campaign continues. It's not something that we ourselves can resolve, and in fact, more often than not, the way the shareholder work that we do it achieves things is working with partners. So we continue to partner with civil society organizations and others, trying to raise that issue all the time. But there's very serious, we think, and I think it's been documented, there are very serious implications for companies if misinformation and disinformation is allowed to continue. Ultimately, long-term, and that's what we're talking about, long-term investors, that's a real threat to the company and to society.
Yeah, and this is a very basic question, but these generative AI systems, large language models, are pulling a lot of data from the web. And so to your point about facts, I mean, they're pulling everything that's out there, right? Whatever people have put up there on the web.
Well, the danger with algorithmic systems and AI is that it can perpetuate the bias that was built into from the learning model. So if you're learning from what's already on the web, and what's on the web is either inaccurate or biased, or the AI system will absorb that. And the danger is that it simply parrots what it's learned. And you can see that, when people have, and I've done this a couple of times with systems, you can coach the system to your conclusion, and it will admit that it's made a mistake. It will, and it's a little scary. AI, ChatGPT told me I had died 10 years ago. Now that's kind of funny. That's kind of humorous. But if you're applying for a job, if you're a young person applying for a job and your resume has somehow gotten misread or misunderstood by ChatGPT, you're in a lot of trouble, because now you have to correct it. And one of the things, and this is one of the things we'd like to see companies, in most cases, there's no mechanism for correcting things. There's no mechanism. It's hard to say, how do you address ChatGPT? How do you tell that system now that there's misinformation or disinformation that needs to be corrected? So again, it's a long-term battle, and we'll see how it turns out.
Yeah, and I know that a piece of your work is around democracy, and misinformation and disinformation have huge implications for democracy and free and fair elections. And I think we're seeing that start to play out. So what's your take on that? Because I think that, in my view, it represents a systemic risk for investors too. And as, democratic institutions and norms are weakened, that's not good for markets or investors.
Oh yeah. Well, without getting too political now, I mean, yeah, we're in some crazy times. And the danger is that people don't know what to believe. If they do believe something, they're not sure how to act. And there are indications, recent polls, as you and I talk now, just the last couple of days, which show higher percentages of people who believe violence may be necessary to achieve political ends in the United States. And I think a lot of that comes from the friction on social media, which tends to divide us all, tends to not find common ground, because that's what social media feeds thrive on. They thrive on friction. They thrive on conflict. That creates eyeballs. It creates an audience. And so those are it's real dangers to democracy. I mean, where we're at now is not a good place.
Yeah. And how about, again, we're going to just kind of run through some of the issues here, but workers obviously is another big one, that AI is replacing jobs. You all had a report out last year looking at this piece of it in terms of the impact on low-wage workers in particular. So tell us, what are you seeing there and why investors should be worried about that?
Well, it's early days yet, and it's interesting. And that report is, probably a year old now already. And we're only just learning now, increasingly, what the impact may be. But we do know that AI is likely to create giant shifts in employment. It's not as simple as automation, that AI will have robots that will replace people, will have ChatGPT that will replace people. It will replace some functions. And the challenges for companies are to how to manage your workforce. Most of the companies we deal with have pretty large workforces, tens of thousands, if not hundreds of thousands of employees. So when you have ChatGPT come in or AI come in for workers, how do you train them? Can you retrain them? Because the projections are that millions and millions of workers will be displaced in some way, that their jobs will be affected, and the people who will be most affected will be people of color, women, people in jobs that are more precarious. And so AI and digital technologies have enormous implications for those kind of workers, but they have what most people think AI happens on its own. It's in a computer. Well, in fact, it relies on what's called a ghost workforce of millions and millions of people all around the world who are tasked with the job of coding and tagging certain pieces of data or content moderation on the social media platforms, and those people are often paid $1, $2 an hour, and it's precarious work. They can get fired in a heartbeat. So AI and technology affecting the workforce, again, Uber, Lyft, platforms like that. So the technology is transforming the way we work in not only the United States, but in the world. And for companies, well, for investors, again, there's a lot of research showing that what's called human capital, how a company manages employees, makes a big difference to the company's valuation on the stock market. And a company that manages their workforce well will do better in the long run. In some ways, that's not surprising, but there's a tendency to think when you have AI, you should just cut people. You should just cut your workforce and lower your costs. When in fact, it's much more complicated than that. And there's a lot of research showing that what the smart companies are going to need to do is to figure out how to take AI, use that to increase their productivity, but also treat their workers well. So it's a pretty complicated issue, a very complicated issue. And companies are just now beginning to understand it and to try to figure out how to deal with it.
Yeah. How about the environmental side? I mean, there's a lot of focus on data centers and the energy and water use. Is that something that you all engage with companies on as well?
We're starting to, yes, we have for the past year. And again, part of this whole AI boom is one of the most important parts of the whole AI phenomenon. People think you're going to buy computers. AI requires what they call compute. It's simply called compute, and that requires huge amounts of energy. And the industry is now, companies are building giant data centers and many all across the country, particularly, for example, in Virginia, huge data centers. Some of them are even Microsoft and others are relying on nuclear energy. And the implications of that are unclear. There's a fair amount of evidence, and many people in the country, most people in the country, I think, are seeing big jumps in their electricity rates, what they're paying for electricity. It's not entirely clear, but some of that at least, will be due to the demand for energy created by AI, and it uses a lot of water. I don't have the exact statistics off the top of my head, but every time you press a button for a ChatGPT a query, you're using up energy, you're using up water, and you expand that across millions and millions and millions of people using this technology much more frequently. And yes, it certainly can, and we believe it does have a very serious impact on the environment. And again, how do you mitigate that? Companies like Alphabet, Microsoft have said in the past that they were committed to net zero and to minimizing their greenhouse gas emissions. With AI, it's pretty clear they're not going to be able to meet the commitments that they made. So again, for investors who are looking for companies to be responsible and to live up to their commitments to climate that they've made over the years, now suddenly say, oh, well, there's this thing called AI, and we may not be able to do what we said we were going to do. That's a pretty big issue.
Yeah, for sure. I mean, I have some hope that obviously it's going to dramatically increase demand for energy, and that's generally not good on the climate front. But it could also help booster and scale renewables, because I think in many cases, the renewable solar and storage type of systems are going to be the cheapest and fastest as compared to new gas or nuclear. I mean, obviously they're going to be looking at all of it, but that's where I see a little silver lining, hopefully. But yeah, I think it's important to keep those companies focused on renewables.
We need optimists. We need optimists. So.
Well, there's so many other issues related to this. You kind of alluded to some of them around privacy and bias in some of these systems, racial and gender equity, surveillance. We don't have time to get into all of them, but how do you sort of categorize them or structure them when you're thinking about these and working with investors to talk to companies?
I wish I knew. I wish I had a good answer to that. Because we're a small organization, and what we try to do is listen both. We play the part of it. We're a bridge in many ways because we deal a lot with investors, but we also go out of our way to listen to other people in civil society and social justice organizations, people who are affected by these issues on the ground. And that informs our work in a big way, and always has. And we take great pride in the fact that we're listening to how technology is affecting people on the ground. We work with a whole number of organizations, and then we try to translate that in a way to investor language, and we tell the investors that. And similarly with investors are telling us their concerns from a financial and fiduciary point of view, and we try to explain to people, folks on the ground, and organizations that are working on many of these social justice issues, how investors view it. And so from that comes a process, and to a certain degree, it's a dartboard process. It's trying to, and we've done a pretty good job, I think. And what we see our mission as is staying a bit ahead of the curve, is that we're trying to identify new issues that are coming around the corner. Because to the degree that we're sort of specialists in technology, we're not technologists, but we follow it closely. We think our job is to alert investors and society to what's coming around the corner.
This episode is made possible by Metis Global Partners, a global equity solutions provider managing over $5 billion. Metis offers both active and customized beta strategies for institutional investors. Through their guided beta product suite, Metis provides custom passive equity solutions to clients desiring sustainably aligned equity and real asset portfolios combined with a high-touch partnership. Founded in 2013 in San Diego, California, Metis serves a wide range of institutional clients, including foundations, endowments, nonprofit, university, public plan, corporate, and family office clients. To learn more, visit www.metisgp.com. That's metisgp.com, or email info@metisgp.com. The Intentional Endowment Network's 2025 annual forum will take place on October 27th and 28th at Goucher College in Baltimore. This forum will convene over 100 leaders from endowments, foundations, and other institutional investors to accelerate learning and action on sustainable investing. We'll focus on fiduciary duty, system-level investing, climate change, responsible AI, inequality, and more. And we'll have trustees, investment committee members, CIOs and investment teams, as well as investment consultants, outsourced CIO firms, and asset managers. Go to intentionalendowments.org and click on Annual Forum to learn more. So as you know, we have a network, the Intentional Endowments Network, of institutional investors, asset owners, including endowments, foundations, pensions. How do you sort of wish or hope that they would use their capital to help shape some of these conversations around AI and the development of these guardrails?
Well, first, you're doing great work. Thank you for that, because it really is important. And we need, Open Mic needs organizations like yours to do our work in many ways. And I think it's, in some ways, it's kind of a simple request or a simple ask of those organizations, which is to read, to think, to follow, and try to get your head around shareholder engagement in some way. And that will mean different things for different organizations. Certain foundations are much more active and they are focused, and they engage in shareholder engagement themselves. Others are not ready to do that, or for a variety of reasons they don't want to. But it is to certainly, when it comes to voting your stock, that's important, because one of the biggest things that affects shareholder votes and proxy votes is people just don't vote. And making sure your asset manager is aware of your interests, making sure your asset manager acts on your interests and votes the way you would like it to, and that's sounds kind of simple. It's easy for me to say, but I've seen it in enough organizations like the ones you're mentioning to know that it can be difficult. Organizations, foundations, they have to work, because what your financial advisor, when it comes to tech, will often say, because people will say, well, if these tech companies are doing all these bad things, why don't you just get rid of the tech stocks? But if you do that, you're going to be hurting your returns in a major way. And that's kind of the quandary an investor finds themselves in. Now, we know some pretty substantial investors who pulled out of Meta. They pulled out of Alphabet because they finally said, but they found other ways, and they're exploring other ways to maximize their returns and remain competitive. So it's a complicated, it's not simple, but my advice would be to be willing to wade into that whole situation and to act accordingly.
Yeah. And, you mentioned some of this, and I'm glad you mentioned managers, because for so many of these institutions, they work through external managers. So finding the managers, I assume, that are up to speed on this and really focused on actively having conversations with companies, I would imagine, is a big part of it. And then to the point of what they should be asking these companies, we talked a little bit about this. You mentioned the one example of the privacy policies, and I'm sure this changes because there are so many issues, but are there, do you have guidelines or recommendations that sort of highlight the risks that they should be talking about with companies, or how do you think about that?
We don't have like a standard card. We don't have 10 points where, and that's because the issues are changing all the time, and companies are changing all the time. I guess the keys, and so we've been consciously reluctant to do that, to say, here's the 10 things you need to ask a company. And there are others who are doing that, and that's great, and it serves a purpose. If I were to say on a top level for an investor, the kind of folks you're dealing with, it's probably corporate governance, and it's making sure that the company is looking at these issues carefully, and that the board is mindful of them, that's reflected in the company's annual report, in its publications, and its behavior, because that's the most direct and straightforward thing that investors can do, which is to talk about corporate governance. Ultimately, investors don't want to and can't get involved in micromanaging a company. They can't get involved on a day-to-day basis. The SEC won't let them, and the company won't let them. But to make sure that you've got a good board, that board reflects a variety of opinions and backgrounds, and that those folks are aware of these issues, and then you try to force them in one way or another into addressing the issues.
Yeah, well, if it's embedded at the principal level in the governance structure, like you say, then, as these issues change, it's their job to keep up with them and monitor them as the world changes. Now, how about in private markets? We're talking about shareholder engagement, which is generally a public market strategy. But a lot of these tech companies, as they start, kind of before they scale, I think there's potential for getting these guardrails on early. So talk a little bit about how you think about that on the private side.
Sure. Yeah. I mean, the typical tech startup is you can't imagine a person in a garage somewhere trying to start up. Well, but on the other hand, OpenAI is a private company, and it's a $500 billion valuation right now. $500 billion. So it dwarfs many publicly held companies. So the hard part in startups is that most entrepreneurs, when they're developing their technology, there's not a whole lot of room for them to worry about what we call ESG principles, environmental, social, and governance principles. And it's understandable in some ways, and so um, uh, there's not a lot of incentive for an entrepreneur to embrace that. However, what we've engaged in with some others, other organizations, we're in a couple of working groups now that are looking at what we call private capital, which is venture capital and private equity. So early stage companies, how do you create incentives for entrepreneurs when they're starting a company to build in some of these principles of good governance and equity, protections on it with AI, privacy, all that. And it's a challenge, but what we're seeing initial signs. My colleague Audrey Muckley, Open Mic's deputy director, was just at a conference in London just a couple of days ago, and found a lot of enthusiasm among certain entrepreneurs, young early stage entrepreneurs, in building in those principles into the kind of work that they do. It's a long haul, though. This will take a lot of time. And now the people say, well, why would they? Why would they do that? Well, for one thing, if you're going to look for an exit, having good corporate governance, having principles that address issues that are of concern to the public and your potential customers, those kinds of principles may, in the argument is, we believe, make your company more valuable. So even from a financial point of view, there's a reason why you want to do that. But it's hard work and it's early days.
And to your point about startups not necessarily having the resources to do that, I think venture capital and private equity funds, could be well suited to help companies integrate that and bring sort of best practices, help make that a lot more efficient and easy for them. Do you have any sense if more funds are doing that and kind of helping companies address these risks early on?
Yes, but it's really nascent. I mean, it's early days. There are some organizations that we're working with who are trying to identify larger groups of folks. There's an educational process. How do you build that into the early stage structure? So I think there's reason for optimism, but it'll be a while.
Yeah, it's early days. And how about, all this we've been talking about, how investors can influence these things, but obviously regulation is a huge part of it. And there's been very little, if any, tech regulation over the years. So how do you think about that? Do you all work in that space at all?
We do. It's not probably our highest priority, but public policy is really important. In the kind of work that we do, we often talk about a carrot and a stick, and to a certain degree, we offer the carrot. And in the past, we've said, because if you don't do some of these things, if you don't try to adopt responsible policies and practices, the government will, and they'll pass regulation. And regulation probably in many ways is not desirable, but it is a reason why companies have to act. And one of the problems we have in the United States is, frankly, a lack of regulation, certainly on the federal level. We do not have a federal privacy law. There is no one privacy law that dictates that. There are laws that affect certain segments, but most privacy law in the United States is based on the states. It is a state law. And in effect, California's privacy law has almost become de facto what governs much of the United States. It's kind of a wacky system. But, especially when you're talking about AI, there's need to and states are adopting a lot of pretty good legislation, regulation on a federal level. I know Senator Markey has just recently introduced what's called an AI civil rights bill, which has a whole host of requirements. Now, what will happen to that bill, how long it will take for that bill to even come to really a debate, we don't know. But you've got to start thinking about most big companies, in fact, will welcome regulation. Most big companies will say regulation's okay because as long as we know what the rules are, we can adapt to them. And to the degree that you want the public to have trust in technology, trust in AI, to the degree that you can say, well, there are regulations that govern this, and we are abiding by the regulations, and therefore there's more, you should be able to trust this. That's a big argument for for regulation, smart regulation. We don't want dumb regulation. We want smart regulation. But yeah, there's a need for it. So we weigh in. Yes, we file comments with the FCC, the FTC, various groups, and again work with some of our colleagues who will say to us, "There's a piece of legislation here. Do you know investors who might be interested in supporting that?" And we'll make introductions.
Yeah, great, great. How about looking forward? I mean, you said a lot of what you do is kind of looking around the corner. So what do you see coming right now, or what are you all exploring for what's next?
In our spare time, well, we talk about that, and because we talk about technology, and there's a tendency, early on it was the internet, and then it became social media, and now we're talking about AI. But there's all sorts of. If you look at the implications of technology, there's biometric technology. There's all sorts of issues related to cybersecurity, and new technologies that we haven't even contemplated in many ways. So it, we're trying to figure out how do we track some of those things, because right now we're fascinated by AI, and I can almost guarantee you that 2 years from now we won't be talking about AI. AI will be called something else, and there'll be a new wave in. And so the question is, how do you continue your learning curve? We're now in the process of launching a new information platform that is designed to keep people apprised and get them in the habit of staying up to date on all of these new technologies. Because without, where we started talking about misinformation, disinformation, without the facts, you don't know what's going on. So there's a lot to be worried about.
Yeah, and it's such a disruptive time. So that type of resource sounds great for investors. Is that, or will that be geared towards investors and will be publicly available?
Yes, called Material Tech, and it'll be launching very soon.
Excellent. Well, keep us posted. And how about a kind of a call to action? What would you love to see, particularly folks in our type of network of asset owners, endowments, foundations do to support responsible AI development?
I think we've covered a lot of it. What I often find is to think about what affects me and how I feel personally. And if I feel threatened, if I feel worried, is to act on that, and act on that through your organizations. Don't parcel it out and say, well, geez, I know I'm worried and I'm concerned about this for me and my kids, my grandkids, or whoever, or my neighbors. But there's not much my organization can do. And I think, again, I know there's a broad spectrum of organizations that have different kinds of policies and practices. But yeah, shareholder engagement, finance-focused activities, using your money, using your endowments, using your investments to make the world a better place while getting good return on your investment. Because the long-term view is probably, almost certainly the research shows, is the best view. And if you take a long-term view and what creates a healthy, a thriving democratic society, that's going to be better in the long term for your portfolio than investments in one or two companies that are just narrowly focused on making the highest returns they can. So across your portfolio, think long term. Think of yourself as a universal owner that owns probably you're talking about big investors. They have a whole portfolio of stocks. So you really want the country, you want the economy to thrive, not just one or two companies.
Yeah, there's much more upside in that than in any individual stock's performance. But that's really well said. And I love their point about just really what worries you, particularly for a lot of these higher ed institutions, as they're thinking about students, critical thinking, and how are students coming into their institutions, how they've been educated at their previous schools. I'm on the board of a small K-8 school, and we deal with these issues. I'm actually talking to the principal of my own high school last night about some of these issues. And I think there's a huge potential in AI for learning and for solving things, but we definitely need those critical thinkers. And so we've got to find ways to make sure that, when you think about kids and that educational piece, it's certainly mission aligned for a lot of these institutions, and they should be thinking about it.
Absolutely. It's a complicated world we live in. I mean, I think my job is complicated. Running a K-8 school these days would...
Yeah, I mean, at every level, right? It's a tough time to be a college president too. I think it's good that it's generating a lot of good conversations that can hopefully bring us through all of this and lead to better times. But Michael, this has been great. And I've got a few kind of quick rapid fire questions I always like to ask guests. So I'm curious, we're talking about misinformation, disinformation, and you've been in the media and digital media environment for a long time. Where do you get your news these days? How do you think about that?
When I was a cub reporter at the Wall Street Journal, I was young, and I asked a version of that question a long, long time ago, and the answer was read everything. And so, yeah, I read the New York Times, the Wall Street Journal, Washington Post, Fox News. I absorb as much as I can, and that's probably the best way. And then digest it all and try to figure out what reality is and where you land and how do you reach conclusions. I as much as I hate, I don't hate it. Yeah, I do hate X, formerly Twitter. It surfaces a bunch of things that I wouldn't otherwise see. So, but I'm a media hound. So I think, but I do think that's kind of required these days, to have multiple sources of information. Relying on only one or two is probably not very healthy.
Yeah. And what do you think about podcasts as a medium? There's reading and social media, but a lot of these conversations I think can help. What do you think about podcasts?
It's interesting. I see all the statistics. I personally find I enjoy them, but the problem with podcasts is that it requires real time. This podcast will require 30 plus minutes or whatever it's going to be. And as opposed to reading something and scanning it for the information you want in a few minutes. So, but on the other end, I don't spend a lot of time in the car, but I think people who spend a lot of time in the car, an audio podcast, I know. And I think it's also a generational thing. Younger people are not reading as much. They're listening and viewing more. And so, but yeah, all the statistics show, yeah, it's giant. No question about it.
Yeah, it can take time, but I agree. It's good when you're driving. I listen to it while I'm doing dishes or other kinds of chores and stuff, and it can really be a good way to get information. But time is an issue. But we're going to find some gems and create some short clips of you in this one that'll go viral and reach lots of people.
Well, you're going to have to look hard to find some gems in all this.
No, not at all. And what about talking about shareholder engagement work? What do you think are some of the most important factors in making an engagement successful?
It's just, again, it's not like I want to stay on message, but it's something we've talked about is facts. I think one of the things that made Mike's work successful over the years has been a commitment to research and knowing what you're talking about. Because a lot of the companies that we engage with and investors both, they deal with a lot of people and people often approach them with issues and suggestions and criticisms, but it's not fact-based. And when you can go to an investor, and because investors, again, they're hard pressed. They got not a whole lot of time. They're trying to maximize the returns on their investment and take care of a whole bunch of things. And you come to them and say, "Hey, we really got this concern about data centers and climate." You need to persuade them, and so the key, I think, is in knowing what you're talking about and being open to changing your positions depending on the facts. And again, with companies, when companies see that you know what you're talking about, it makes a big difference, and that you're not just blowing smoke and trying to campaign based on political whims.
Yeah. All right. And how about outside of work? What would we most likely find you doing when you're not working on all of these issues?
It varies. The last couple of years, I live in a small town in upstate New York, about 2 hours outside of New York City, near Woodstock. And we have a small community theater, and I'm the president of the board of the community theater. And I spend a lot of time trying to make the systems work and our building is 138 years old. So we're trying to raise money to make sure that we're around for another 138 years, and making sure we got the right selection of plays and shows and movies and there's a lot of joy in that. We're a small community, so you realize you can do what doesn't seem like a lot, but it brings a lot of joy to the community. So that's what I spend lately, what I've been spending my time on.
That's very cool. I was actually thinking about that this morning. And related to AI, I was reading the news about this new AI actress that was kind of all over the headlines there. And, there's big pushback out of Hollywood and some good points about, maybe this is just another way to do creative expression. And, it's a separate genre to have AI actors. And I was like, okay, fair enough. But it makes me think that this might be a way, if that's the way that the screen is going, I wonder if it's going to push a resurgence for people to want to go out and actually see plays and see real humans on stage.
We had a show over the summer, and it was a musical and a big cast, and we sold out most nights. And when you got 150 people, and that's the size of our theater, 150 people, which is a decent size theater, 150 people and a musical and a big cast, and you come out after 2.5 hours of that, and people are just having a great old time. There's nothing like it. AI is going to have to work long and hard to replace that.
Yeah, exactly. I'm sort of hopeful. There's a little bit of a chance that all this tech kind of pushes us back to each other on some level. Well, I've got 2 final questions that we ask everybody. And the first is, what's your vision for the future of finance, given the work that you do?
Well, that's a tough one. Finance has gotten so disparate and scattered. It's kind of hard to predict exactly what's going to happen and where the flows of capital are going to go. When I was a kid, I worked as a messenger on Wall Street. One of the reasons you had Wall Street was that if I bought 100 shares of stock and I sold 100 shares of stock, you literally had to trade the stock. So all the firms were in one place. They were on Wall Street. And now, these days, finance is so disparate and it's global. I think you're going to see a lot more activity, certainly in the developing world, in the majority world, in global South, and that's going to make a big difference. Hopefully you will see that. It's happening already, and I think that is going to change a lot of how big companies certainly view their responsibilities in their businesses.
Yeah, nice. And how about for young people, college students who might be interested in sustainable finance, responsible investing, or tech and AI? What kind of advice would you give them?
Responsible tech and sustainable investing are 2 of the most interesting areas you could pursue. Both of them are incredibly dynamic. Technology changes every single day, and that's not going to change in the foreseeable future. So immersing yourself in that and studying it and trying to figure out how it all works, what are the leverage points, who's affecting whom. It is really a course in politics and in how society works. And by looking at responsible investing in technology, you'll learn a lot about how the world works.
Awesome. Excellent. Well, Michael, this has been so great. I really appreciate your time, and looking forward to continue to work with you on all these issues.
Thank you. Thank you for having me. And yeah, let's continue to try to climb the mountain.
This episode has been brought to you by Metis Global Partners and by the Intentional Endowment Network's 2025 Annual Forum, taking place October 27th and 28th at Goucher College in Baltimore. Thanks for tuning in for the Future of Finance podcast. We hope you found today's conversation insightful and inspiring. Don't forget to subscribe or follow us on your favorite podcast platform. And please take a moment to rate, review, or share the show. All of this really helps us to reach more people like you who care about creating a thriving and sustainable future. And it's a really easy way to have a big impact. So please do follow. A quick disclaimer, the content of this podcast is for informational purposes only and does not constitute investment advice. Investments and strategies discussed may not be suitable for all listeners. Please consult a financial, legal, tax, or accounting professional before making any investment decisions. References to managers and funds are for informational purposes only and should not be considered endorsements or investment solicitations. This podcast does not monitor fund performance or guarantee the accuracy of third-party materials or statements. This has been an episode of the Future of Finance podcast, exploring how finance can shape a vibrant and sustainable future. Thanks for listening, and we'll see you next time.